Good afternoon. Welcome back to our next session. It gives me great privilege to introduce this next session. We have a great privilege to have with us Gil Mandelzis, founder and CEO of Capitolis, and a serial capital markets disruptor. I'll let him tell you more about that. In conversation with Haim, Sadger, who is the managing partner at S Capital and Sequoia Israel, obviously a very respected VC. He'll also tell you more about him. So without further ado, I am going to remove myself from the stage and please give a virtual round of applause for Haim and Gil. Thank you very much.
We really like the virtual applause, guys. You can stop for a second. So I guess, Gil, before we go and discuss Capitolis, let's start by at least tell the audience who we are, a little bit about our background. So I will do it very fast. And I personally started Sequoia Israel in 1999. And since then, I had 19 exits in Sequoia. But the most interesting work for me in the last 25 years as investors, I started before Sequoia, was to meet Gil, and we'll talk about it later. And that was in 2001. So it seems that half of my life, right? I'm now 25. So half of my life was with Gil. But I'll switch to you, Gil. Just tell the audience about yourself a little bit, and then we'll go about our meeting and Troyana and all the other stories.
Definitely. Yeah, it feels like much more than half my life is with you, Haim. So, originally from Israel, born and raised, spent some time both in management consulting as well as in investment banking in Israel and in New York. And then in 2000, as the internet was exploding, decided that I want to start a company and I started a company that was Troyana. Did that for 7 years. Obviously, we worked very closely together and other wonderful Israeli VCs and Sequoia in the US. And then Troyana was sold in 2007. I stayed with the acquiring company ICAP for another 8 years and then left to start Capitolis 4 years ago, and obviously seeded by Sequoia Israel. And I guess the rest is history that we will cover.
Yeah, well, a long history probably now when I think about how many years have passed since then. So I met you first in 2001, and both of us were a little bit younger than today. And I guess that both of us not really too much understood what we would like to do. And we'll talk about that a little bit. But so just can you say a word or two about Troyana? What's the story of Troyana? What was the main goal of Troyana? And then we'll take it from there, because there was an interesting event in Troyana that I would like to talk about the
Sure.
thing.
So look, there's Troyana before, like the year before we met, because Troyana started in 2000. Troyana started with one business model, which was sort of the next generation B2B marketplace. But then the internet bubble exploded, and there was September 11th and other events. So we basically changed like 3 or 4 business models before the time that we met Sequoia Israel, and great support from our investors at the time, Evergreen and Gemini, and great support from the team. But then we converged around this area called foreign exchange prime brokerage, which basically, think of this as like a very large institutional credit card for foreign exchange transactions. And in this world that was just developing, Troyana was the Visa network or the MasterCard network, and still is the largest player in the world providing that. So by the time we met, we kind of converged around, this is the space that we want to play in. Started initially as an enterprise software player and then moved to a SaaS model before people called it SaaS. And by the way, we were fintech way before fintech was a term, but we really became this global network that has grown with volume and number of participants, and that when it started going, it grew very fast, and then the company became strategically very interesting to a few players and was ultimately sold.
So it sounds that Traiana was an amazing company, and it was right on the spot, and the idea was great, and you disrupted the fintech, the financial world with your first company. So can you explain to me as a layman and somebody who was not there, why did we sell the company?
Yeah. So first of all, I asked myself this question many times. I think that we sold the company because at the time, the level of the aspirations of companies was not as high. Like people were not, if you think about it, at the time I was incubating at Sequoia, and PayPal was sold for, I think, $750 million, and YouTube was sold for $1 billion. I mean, these were like the biggest exits. Nobody was thinking in the same terms that people think today of building a tens of billions of dollars or hundreds of billions of dollars company. I think I was a first-time entrepreneur with, the Traiana roller coaster was a very meaningful one. And I think at one point we could all make that there was a really good could have been a really good outcome for me personally, good returns for the investors. And I think we're slightly exhausted. The cap table that we had was very complex by then because there was a lot of dilution. There was a down round at one point that was very painful. So there was, to keep going, it would have been very complex and very painful. And we took the easy way out. I think that in retrospect, when we look at everything we thought about the market in terms of the market opportunity, how the market will develop, what's going to happen with competition, the potential for the company, everything was right. And I do kick myself. At least once a week, seeing how big the opportunity is and how ripe Traiana was to capture that. But thankfully, that keeps me going, because when we started Capitolis, now like our intent was definitely to take it as far as possible, rather than taking sort of easy way outs along the way.
No, definitely. We'll get into there. I mean, what's the difference between second-time entrepreneur and first-time entrepreneur? But just to let the audience and tell them about one event at least that we had in Traiana that I guess changed both our lives. For me as an investor and for you as an entrepreneur, and that's probably why we stick together so long. I mean, I think I don't know when it was exactly the time, but I was speaking to Don Valentine, who was the founder of Sequoia. So just to give the audience a little bit feeling about the guy invested in Apple, invested in Oracle, invested in Cisco, invested in NetApp. If you take the worth of his investment today, I think it's like 10% of NASDAQ, total NASDAQ, which he's considered to be a great investor, to say the least here. And I approached him and we discussed potentially for him to invest from Sequoia US directly in Traiana and join our board. So Don joined our board, and for me it was a life-changing event, because after every Traiana board meeting, I went to his office. That was a corner office in Sequoia. They gave him the best corner office in Sequoia. And we spent like 6-7 hours talking about the board. Unbelievable, because the guy never invested in many companies. He invested in very few companies. So among the names that you heard, Oracle, Apple, Cisco, NetApp, he invested in Traiana. By the way, if he were with us today, he would have invested, I'm sure, in Capitolis, because Capitolis is going to be one of those names, I'm sure about it. But Gil, I mean, except the fact that he took you to San Francisco Opera or San Francisco Symphony, because he was one of their biggest contributors, what did you learn from Don as an entrepreneur?
Yeah. So look, Don is certainly one of the people that influenced my life more than more than almost anyone else. I got to spend tons of time with him. And I considered it at the time and in retrospect that like an incredible privilege, and it's just a super special person. I think several things that were very important with Don. One is, as you know, brutal honesty. Like he said and called things the way they were, and he didn't hold back punches. He didn't do it to hurt anyone, but it was just like, we need to really acknowledge where we are and say it and be truthful. So that was the first thing. And I saw from him, like, he would say the most outrageous things in the calmest way. And I learned that the sky is not falling, and you could actually deal with that and have a mature conversation about it. That was the first thing. The second thing that I think I learned from him was all around the importance of scalability in business models. You could be in the right, and that's what happened with Triana. We were at the perfect market. The market was growing. We were offering great solutions to the market, but our business model was not thought through, and we didn't have enough scale. We're just selling very big softwares to a limited number of participants, whereas what was really growing was the number of transactions. And we had this network, and I was ignoring it for a while, as you remember, and like focusing on selling the software. And Don was saying continuously how, we're waiting continuously for the next miracle to happen, and that the worst things that's happening to us is that miracles do keep happening to us until they won't. And he saw us running into a wall, and indeed we did. But he also said, this network thing is super scalable. We should pay more attention. And we worked through the transition together. And that is where like it went sort of 0 to 100 in a couple of years. So the focus on scalability and business model and how important it is has been sort of a hugely guiding principle for me, since then. And then just also the courage to do the difficult things, and to do the difficult things with people, to do the difficult things with businesses or with products that don't work, with investors if you need to be confrontational. Just, when you need to do something, you just have to do it, and there's no escape behind this. I think these are the three things, or these are three things. I'm sure that I'm going to think of other things later, but these are definitely three things that I've taken from him.
Yeah. So by the way, for me, just people won't understand what I'm going to say now, but for me, when Don, after your first board meeting, that's a true story, but I don't know if I told you that, we came to his office. I started to invest in May 99. That was probably 2004 or so. So I was experienced VC, and I thought I'm sitting on the horse and riding it. And he said, so tell me, Haim, what do you think is your role as an investor? So I said, to help the CEO and interview the executive team and help in introductions and blah, blah, blah. And he looked at me and said, no. I said, what do you mean? He said, your role is just one, to fire the CEO. And I was shocked. I said, what? He said, no, that's really your work. I mean, all the other thing that you just mentioned is the work of the CEO and not yours.
Yeah.
And the beauty about that is, if you analyze it, it's not that I have not fired any CEO since we met, by the way, Gil. But the beauty about it is that as an investor, he taught me how to treat the CEOs differently than the other VCs. I'm not running a company. I'm not running your company and any other company. I think that in 2016 we met again. We met.
Oh.
Yeah, well, right. We met, but we met in 2016 when you came with the idea of Capitolis. I think that we can talk about Capitolis today a little bit later. But can you just remind me, what was your original idea when you came with Capitolis idea? Because there's something that I remember, and I know that companies that come with great original idea and continue to execute on this idea will become great and big companies. We saw it with Google and all the other names that I just mentioned for Don Valentine. So what was your original idea, and why did you came with this idea?
Yeah. So first of all, the original idea is not different to the current idea, and it's remarkable how it's now been actually 6 years since I started thinking about this seriously, and the idea is the same. But basically, on the back of the financial crisis, the regulators wanted to never need to bail out banks again. And as a result of that, they have reduced the effective balance sheet that banks have to extend. So they wanted banks to reduce their leverage and to do less things off balance sheet and to reserve more capital against the same activities. The good news is that the world became safer. And we just went through this massive crisis of the pandemic, and not for a nanosecond were we worried about the need to bail out the bank anywhere in the world. So that's great. But it was very clear to me, sitting in the sort of the middle of financial services industry and capital markets, that the effective capacity of balance sheet and banking in the world has shrunk meaningfully. There are far fewer banks. So there used to be Merrill and Lehman and Bear Stearns and other banks. There are fewer large banks. They have more constraints on their balance sheet. And the demand for banking services is actually only growing. So what we have is a capacity problem of balance sheet in the world, and there was a question of where it's going to come from. While this was happening, I always loved reading and learning about what's happening in Silicon Valley and the startup world, etc., and technology world. And there's been this massive growth of the sharing economy. I started reading initially about Zipcar and then Airbnb and Uber, and I was fascinated and taken by all of these new business models that are all about finding excess capacity or idle capacity and connecting it. And I had this realization that we could basically bring the sharing economy to the capital markets world. There is no capital problem in the world. There's too much capital in the world. But that capital does not have access to the opportunities that, say, a JP Morgan or a Citi is originating. And if we're able to connect those two, then you could have explosive value that is going to make the entire system better and basically help, what the regulators want to achieve, what the large banks want to achieve, what investors want to achieve, what clients want to achieve. So the idea is to create this Airbnb of capital or balance sheet within the world of capital markets, and through collaborative models, basically offer the complete solution to the market.
Yeah. No, it's interesting that you mentioned Airbnb, and the reason that it's interesting because Airbnb is a Sequoia company, and actually Sequoia invested in Airbnb on day one, and we invested also in Capitolis in day one. And when we have, people don't know that, but we have in Sequoia every half a year a meeting, which is the entire partnership, and we talk about companies. And there's no doubt about that we at Sequoia feel and know that what you do to the financial world it's very similar disruption that Airbnb did to their market. And so when we discuss it internally, we definitely feel that this is the Airbnb of the financial market. So thank you for mentioning Airbnb. By the way, personally, I know it's going to be like that. Gil, it has been since we first met, talking about Capitolis, not first met. I mean, the company has grown and we are in a different place today. Can you tell the audience where we are today? What's the growth rate? Why do we continue to think that you are the Airbnb of the financial world? It's okay, I didn't say Cisco or Google, or I just said Airbnb.
So we've been around for 4 years. Last year was really the year where we started seeing some meaningful escape velocity, and we've grown our revenue run rate almost sevenfold last year. And this year, we're hoping to grow our run rate another between 3 to 4 times. So we're starting to get to meaningful numbers in terms of revenues. hiring from a people perspective, we entered last year at less than 50 people. We will exit this year at around somewhere between 150 and 200. The number of clients is growing meaningfully, but the number of transactions and the volume that's going through the system is growing much more meaningfully. I think that what we've discovered along the way is that the opportunity and the market acceptance to our philosophy and to the types of solution is far greater than we were hoping or imagining. These things are happening faster, and as a result of that, we've raised more money. We're adding more people, and we're growing fast. So so far so good. We're very optimistic and very excited about how beneficial this could be. And when we started implementing it, we also saw that the benefits are far greater than we expected in terms of the savings, like how much capital is truly out there, that and what can be the effect on the overall business is far, far greater than we expected. So super excited. And unfortunately or fortunately, we're working as hard, even with 150 people or now 100 people. We're working harder than we did when we thought that 50 to 100 will be able to not work so insanely, and it just keeps going the same. But we're obviously very grateful and very happy about it.
Yeah, by the way, before we invest, definitely before we invested in you, although we knew you very well, we look into number of ingredients in the investment. So you personally, it was very easy, right? I mean, in my mind, you are one of the best entrepreneurs on this globe. So that was an easy one. The question was, is the market is there? And the story that you depicted at the time and you told us was the story that you just described now was a great story. We were not sure that what you said about the size of the market is correct, but today we know the market is much even bigger than you dreamed about it, and that's something that rarely happened to companies. And when I say Airbnb of the financial world, that's the reason why. Did you want a little bit to describe some of your products? I mean, a little bit more in detail, so the people who are more into financial world will understand it.
Yeah, so basically there are two types of solutions that we offer the market. The first one is helping people squeeze more drops from an existing lemon and drops of balance sheet. So how can I use my balance sheet more efficiently with the current positions that I have? So a simple example would be that let's assume that I bought an option from you, Haim, and it's a $100 million option for 3 months, and then I sold the same option a week later because I can make profit, hopefully, to somebody else, and it's the same option. So I have a buy with you and a sell with the other person, $100 million each for 3 months. So I have my profit, ideally profit or loss, on day one. But now, because I now sit on $100 million with you and with the other person for 3 months, every day I have to reserve capital. So every day costs me financing. So in an ideal world, we're able to identify this opportunity and say, hey, Haim, could you face the other person because you have offsetting positions and let me step out of the trade? That's called innovation. And when I do that, I still have the same profit and loss, but I don't have the carrying cost for 3 months. Okay, so we identify such opportunity.
By the way, Gil, who is Haim here? Who is your customer, typical customer?
So we started with the largest banks in the world. So all the top 20 banks in the world are our clients. So JP Morgan, Citi, State Street, every large bank in the world. But then it's the largest hedge funds in the world, second and sort of regional banks, and it keeps growing. And the nice thing about this is everybody wins. So actually people bring us their counterparties continuously. So there is tremendous scale and network effect to the model, and we're building this community. And there are all of those scenarios that I just described an FX options novation, but there are a multitude of basically infinite use cases where you could basically identify this dead weight and get rid of it. And we're operating today with any product within the foreign exchange world. We started in the world of equity total return swaps as well, and we're going to grow to basically any asset class that's out there. So that's one thing that we're doing. But after we've basically compressed or eliminated anything that's possible, the banks are still left with huge balance sheets that is their own capital. And this is where the Airbnb model kicks in, because we believe that through bits and bytes technology and also financial engineering, we could create a place whereby any insurance company, any corporate, any asset manager in the world, or small banks can provide the financing to a Citibank. So an example would be that you could have a corporation that wants to have a credit line with a large bank. Say Citibank is in a great position to originate and service this loan, but the capital is too expensive. So perhaps some of that loan basically can be provided, or some of this credit line can be provided by any investor on the planet, while being serviced by the large banks. So the largest banks, basically through the combination of those, become significantly more capital efficient and capital light. They become fintechs themselves, servicing their clients. They use as little capital as possible because we help them compress it. And when they need capital, a lot of it will come from the market at large, right? So, and that's the financing component that went live in the middle of last year and has been just exploding. We finished the year at around $6 billion worth of financing alone, and this year we're going to do much more of that. And in terms of eliminating positions, we're getting very close to having eliminated about $10 trillion of positions. And again, this is growing very fast.
Yeah, no, thank you. So you are actually a Silicon Valley entrepreneur that finds himself in the midst of in the middle of the financial world. And when I say financial world, this is not PayPal. I'm talking about the real hardcore of the financial world. I'm talking about Citibank and JP Morgan and all the others that, to find yourself there as entrepreneur, really Silicon Valley entrepreneur. By the way, we didn't talk about the technology part of this company. We have a huge technology here to support what we do here. But another reason that we invested in you is that we actually found that there are no Silicon Valley entrepreneurs in this world. How do you operate with these guys? How do they find? How do they work with you? How you can bridge the gap between being a Silicon Valley entrepreneur and those great, wonderful, but huge dinosaurs that, and you're a very small one. How did you bridge this gap? Other entrepreneurs could have not done it. It's almost impossible.
Well, so first of all, I would not define our clients as dinosaurs. I think
dinosaurs. Just to be clear here, we forgot as humans, the dinosaurs ruled the earth for 400 million years. We are less than a million years here. So dinosaurs are not bad. Yeah.
So these are great institutions that are ever evolving. Look, it's any industry requires innovation. This is a huge industry. That the industrial logic of this industry was rewritten globally in concert by regulators about a decade ago. So first of all, the magnitude of the change is humongous. It's a funny thing about financial services. Like you will remember, like when you invested in Triana in 2001. Fintech was like, well, the term didn't exist, but the worst thing you could do is be in financial technology. And I remember I was flying. There were 4 fintech companies in Israel. I was Triana, it was Sayota, that was obviously Naftali Bennett, Super Derivatives, and I forget the name of the company was sold to NICE. They were fabulous entrepreneurs. I'll remember the name in a second. And I remember flying with Naftali to New York. We're sitting in coach and we're sort of moaning to one another about how investors didn't want to touch financial technology. It was the worst thing you could do. And 20 years later, obviously fintech is very hot, but when you look at capital markets, it's still remarkable, because I told one of the venture capitalists in Silicon Valley recently, as we're raising our fund, we said, somebody will walk into your office and say that they want to populate Mars. And they're like, yeah, not a problem. Here's a check for $100 million. That makes perfect sense to us. But if, God forbid, somebody walks into their office and say the word derivative, everybody's running back to their offices and hiding under their desk. Thank goodness. At the same time, when you think about a lot of the innovation that's been happening in financial services, in capital markets specifically, the thinking on the East Coast tends to be more short-term, more timid. They're not like, people do not raise the same amounts of money. They don't have the same longevity in terms of how they think about the time to invest and build in the network, et cetera, and therefore, few companies in capital markets that started like true startups ended up being 10 or 20 or more $billion in market cap. This is why we're so excited about the opportunity, because building this combination where you need to have very specific domain knowledge about this space and credibility in the space. I mean, Triana became important enough to this world that I was invited to sit, and I was part of the Foreign Exchange Committee of the Federal Reserve and the Bank of England and the Bank of Canada. And at one point I was running the largest platform for fixed income trading, and involved with the Fed Washington, the SEC, and others. And we have quite a few of those people on the company. Tom Glosser, my co-founder and our chairman, who was the CEO of Thomson Reuters, is also on the board of Morgan Stanley, and so on and so forth. So we bring deep domain knowledge and credibility within this industry, but we are also bringing this mindset of Silicon Valley, the audacity, that we're building a team. A lot of the team that we're building is not from capital markets at all, which is counterintuitive to fintech capital markets companies. But at the same time, we do have a lot of that knowledge as well. That's a rare combination. That's very difficult to do, difficult to replicate. And the nice thing is, once you're in and you have the credibility and you work with people and they're comfortable with you, these are things that tend to perpetuate themselves. And by the way, we also brought 3 of the world's largest banks, Citi, JP Morgan, and State Street, who have been phenomenal partner of us. They're also now investors. They sit on our board. So we're building this amalgamation and reinforcing it, and feel very, very, very good about this. It is very difficult to do in this industry.
Yeah, Gil, so I'm your investor from day one through Sequoia, and I invested from my new fund as capital in you. But there are other investors that worth just to mention their name, because this company actually probably gathered the best investors on the globe. You would like to mention them?
So on the VC side, beyond Sequoia, we have Index Ventures, and we have, and within Index, it's Jan, who has just been a phenomenal partner and obviously great investor in fintech. Then we have Spark Capital and Jeremy Phillips, who is amazing and again, very knowledgeable about the space. And more recently, the last round was led by Andreessen Horowitz and Alex Rampell, who basically leads the fintech effort there, and is just absolutely super knowledgeable and bright. And then in addition to that, we have, initially Silicon Valley Bank was the first bank to join and to support us, and we have a great relationship with them and a very strategic one. And on the back of that, also Citi, JP Morgan, and State Street. I don't think I'm missing anybody, but these are great investors and have been incredible partners, and super value add, all of them.
Gil, there are entrepreneurs in the audience that we don't see their faces, unfortunately, because it's totally virtual here. But if I'll take you back 19, 20, 22 years ago, and you'll meet Gil Mandelzis of that time, what would be your 3 most important advices to that person or to the entrepreneurs in the audience? In that
yeah. And by the way, I have to say, like, I give advice also. This is the advice that I give people continuously. So I would say the first thing is really daring to really go for greatness. You have to, like, don't think small and don't round corners. Just think very big and dare to go for whatever you can be and whatever the company can be. And by the way, if you think about building a long-term huge company, you will think very differently about the things you do on a day-to-day basis. So the first thing is, like, really daring to go for think as big as possible and really go for it. Speaking of Triana, sort of my regrets of selling early.
No regrets, Gil. We have a wonderful company now.
Yes, exactly. And by the way, it was good. It was a good outcome. But yeah, the second thing I would say is, just in that context, just always keep learning and surround yourself by the best people that are out there. Like, the most expensive resource that a startup has is time. And what you need is to make as much use of your time, and you do that by surrounding yourself with the best people possible. And when people come to me and ask me, like, people love, do I want VC, and there is dilution, and what do I do? I, of course, went the first time and the second time around as well to the best VCs that are out there, and I seek the best people on the board and the best mentors and the best coaches and the best people on my team. And of course that the best VCs are also the most expensive money in terms of dilution. And you could get people who are going to give you silly valuations, and they're not the best VCs. I think that the best VCs, you in particular, Haim, as you know, I voted with my feet again and again. And I think I said in the past, I will not start a company that you're not going to invest in. But other VCs, is like the remarkable VCs that we have. Obviously, they're worth it. And that dilution and surrounding yourself with the best people, and then listening to them and partnering with them, are totally worth it. So find the best people who are going to keep you honest, who are going to drive you in a very supportive way. We talked about Don Valentine, and he was, like, amazing in pushing me and in keeping me very, very honest and very humble, but pushing me continuously in the right direction and in a supportive way. And I had the pleasure of working with, like, amazing VCs in the past. It was Rona, who is now at TLV, and Adi, and Eretz Shachar, and of course Don and you. And this time around, we have amazing partners. So can't overemphasize how important that is. And the last thing that I want to say is, dilution only matters in a down round. So one thing that I've learned from you, Haim, is you load on cash whenever you can. Because one thing, we had this conversation, Haim, before the pandemic, and you said you have to raise, this is when we raised our Series C, and we're like, no, we have the money, and, like, why do we need that? And you said to me, listen, something, I don't know, you didn't predict the pandemic, but you said it cannot continue forever just to grow like this. Something bad will happen. And we raised our $40 million round just before the pandemic, and we went into the pandemic with about $50 million in the bank, and we felt, like, so good and comfortable and ready. And the same thing happened in our seed round, where I wanted to raise little money, and you pushed to raise more. And the same thing happened with this last round of funding. So whenever people can raise money, and when you think you're going to, whatever you think you're going to need, raise more. And then don't spend it like don't be silly in how you spend it. So the fact that you have it doesn't mean you have to spend it, or you don't have to spend it first, definitely not recklessly, but spend it wisely, but have as much capital as possible with the best partners that are out there. Dream big. I think good things are going to happen.
Thank you, Gil. Look, I think we have 40 minutes behind us, and the question, I don't know if we have time for a question or two. I have no clue, but if yes, we might be able to take one or two.
Yeah, happy. Anybody got any questions? Don't all shout at once. Thanks. Okay, so yeah, guys, I think we'll have to leave it there. But they're a bit shy. They need shaking up after lunch. But fantastic. Thank you very much for joining us and sharing your insights and background. I'm sure that entrepreneurs of the world have learned much. It's been thrilling. Thank you very much for getting up so early. I know obviously you're in New York.